Clearly, we're in a bull cycle, I think. When people say we're not in a bull cycle, what they're talking about is the last 3 months.
Yeah.
If your frame of reference goes back to, say, the year 2000, which is where my frame of reference goes, we are clearly in a bull cycle. If you look, as an example, at the gold price in US dollar terms, gold is up something like 8.6, 8.7% annually, compounded for 20 years. The people who don't think we're in a bull cycle are people who either aren't very good at arithmetic or whose imagination is probably particularly acute. But if you look around a range of commodities over the last 2 decades, pick one: oil, coal, copper, nickel, even the ones that are down substantially in the last 18 months, like lithium. We are clearly in a bull cycle. And the reasons for that are really simple. There are 8 billion of us on the planet. Every day there's more. For 40 years, we've done a great job lifting the poorest of the poor worldwide, 1.5 billion people, out of dire poverty, making them merely poor as opposed to extremely poor. Is there a lot more to be done? Absolutely, but we've done a great job. The consequence of that, Lucian, is that when poor people get more money, which has happened on a wonderful scale for 40 years,
Yeah.
the stuff they want to buy is made of stuff. When you and I get more money, we buy some little gadget from Apple or we buy a service. But when poor people get more money, they replace a thatch roof with a metal roof. They replace mud wattle with concrete. They go from barefoot to shoes, to bicycles, to 50cc motorcycles, to a Toyota Hilux.
Yeah.
And this is going on around the world. Is the bull market going to continue? Of course. There's 1 billion people on Earth with no access to primary electricity. 1 billion. There's another 2 billion people on Earth with access to either intermittent or unaffordable power. And the same can be said for calorie counts. The same can be said for the whole range of the material standards of living. Meanwhile, you want to live better too. You want your children to live better than you did. All of this requires stuff. Now,
Agreed. Yeah.
could we have a global recession that delays this? Absolutely, positively. Again, it's important that investors think about their time horizons, think about what is possible, as opposed to thinking about merely what they want to happen in a market.
Yeah, good point. I have to agree with that. You mentioned gold, and gold is one of the commodity that is now at all-time high. But majority of gold stocks are around 5-year low. Can you explain the disconnect with those two?
Absolutely. And first of all, gold is only in all-time highs in nominal terms.
Yeah.
In real terms, against the US dollar at least, gold is not at all-time highs. And people
Yeah.
need to understand that when they think about where gold might go.
Yeah.
The second thing is, with regards to the underperformance of the gold price, it's worth noting that buying of gold is not widespread. You are not seeing retail buying of gold except in China and India. The gold purchases that you're seeing are central bank purchases. And those central bank purchases are really looking for an asset that could be a medium of exchange outside the US dollar. It's the weaponization of the dollar rather than the fear of inflation that is the driver of gold itself. These gold buyers, central banks, are not buyers traditionally of gold equities or equities at all, for that matter. So it makes perfect sense, pardon me, at the top of the discussion, to say that the gold bull market and the market in gold stocks thus far is disconnected, because while the buyer has a need for gold to circumvent the US dollar, the buyer doesn't have a need for gold stocks.
Yeah.
But there's a second reason that I think is worth discovering, and that is the chronic underperformance of gold mining companies as businesses for the last 50 or 60 years. Lucian, if you were as old as I, which I can tell you're not, you would remember the decade of the 1970s when the gold price went from 35 US dollars to $850, the best bull market for gold stocks probably in recorded history. The hangover from that, if you will, is that the gold stocks that rewarded investors the most in that bull market were the ones that exhibited the most leverage to gold. And The most leveraged companies, ironically, are the most marginal. If you're a high-cost producer and the gold price goes up, your margin increases faster, ironically, than a more efficient producer. When the investor, which they have now for the last, I'm going to say, 50, 60 years, looked at gold investments, they looked for the most leverage, which is to say the most marginal. And the industry became very, very marginal.
Yeah.
If you look back to the decade 2000 to 2010, the gold price in US dollars was up more than sevenfold. And yet free cash flow per share among the XAU in the US declined. It took real skill to screw up a market where the selling price of your product increased sevenfold and you reduced free cash flow per share. So the expectations that the investment community has around gold mining companies are extraordinarily low. From my point of view, that's good news. It's good news because I don't have much competition on the bid for gold mining stocks. And I would suggest to you that some investor expectations have become more rational. I would suggest that most of the management teams that presided over the destruction of capital in the period 2000 to 2010 have been allowed to pursue other employment opportunities. So I think that the gold industry is held in low repute, ironically, right at the beginning of its renaissance. And I regard this as a particular opportunity.
Yeah, can we apply this answer you gave me on silver as well? I mean, silver is also one step up, two steps down. How is the outlook for silver from your corner?
Well, the silver stocks are tricky because there aren't very many of them, first of all, and also because the silver companies are price takers. Most silver that's produced is produced from recycling or as a byproduct of other metals. So to understand something about the silver price 5 years from now and 10 years from now, you have to understand something about what the production levels of copper, lead, zinc, and gold are, where silver is produced as a byproduct. It is very, very, very tricky. It's worth doing because in the later stages of a precious metals bull market, gold moves first. We all know that.
Yeah.
In the later stages of a precious metals bull market, when silver moves, it moves much faster and much further than gold does. And the silver stock buyers are manic depressive. They either hate the material with a passion, like right now, or they're absolutely rabid buyers.
Good point. Yeah.
The joke
Rick,
is that, go ahead.
Yeah, let's discuss also uranium. One smart man told me that the easy money has been made and that the real money gets made now. You know the man. What is next for uranium?
I think it's true that the easy money was made when silver progressed from being hated at $20 US a pound to tolerated and sometimes loved at $100 US per pound. The market has begun to settle out, which is to say that the spot market has declined from 108, 110 down to something like 90. Every market needs a breather, and uranium is getting its breather. It got too hot. What's important to note, Lucian, is that the structure of the uranium market has changed. And not one investor in 1,000 has paid attention to this. First of all, in terms of the spot market, it's now highly illiquid. It used to be very liquid, but it's highly illiquid. The truth is that more dollar volume often takes place in the Sprott Physical Uranium Trust than takes place in the spot market, which is to say the tail is wagging the dog. One could go so far as to say the Sprott market is the spot market, which is an interesting circumstance. The trades are taking place now in the term market, and this is important because it's a mechanism where producers and consumers can lock in security of volume and price for the 5-year term, the 10-year term, the 15-year term. On the consumers' needs, new nuclear-powered plants are very capital intensive, and increasingly, the bank financiers of new plant construction are requiring the plant owners to lock in enough supply of uranium over a reasonable period of time that they can amortize the loan. So there's a huge demand for secure supplies of uranium. unlike any other commodity that I know of in the world, the market structure in uranium is changing from one where the producer and the consumer are held hostage to overnight markets to one where both supply and price are locked in. From a producer's point of view, this adds great certainty to their revenues and pretty good certainty to their margins, which means that lenders to the uranium space don't have to be concerned with market fluctuations as much. From the point of view of an old, lazy securities analyst like Rick Rule, the idea that you have some pricing certainty makes it much easier to value the equities. My suspicion is right now, of course, these terms are very opaque and you have to work very hard to come to understand them. My belief is that the companies that are transparent and forthcoming with their term pricing will enjoy lower costs of capital. And I suspect over the next 5 years that there will be something approaching standard industry reporting around these term contracts. If that happens, my suspicion is that uranium will enjoy the lowest cost of capital of any of the specialty commodities. And I look forward to that.